Good morning, active traders, and welcome to our Trading the Open live room experience, celebrating 16 years in business. Great to see so many of you here. Lots of new faces, and so wanted to welcome all 300 plus of you to this morning's session. It's nice to see an epic turnout as we get ready for a holiday trading season. Hope that y'all are getting your holiday shopping done, or at least thinking about it, and getting ready to relax and close out another big successful year here at Trading the Open. It's great to see so many new faces. You're in the right place for professional stock day trading. As always, all information is for educational use only. No advice about what to buy, sell, or hold is being provided. By watching this, you agree not to make actual trades. We do not make any profitability nor performance claims. We do not do live real money trades because that's risky and stupid. What you want to do is paper trade in a safe learning environment and at least double a demo account until you even consider trading live capital. You know, as I've said for years, you have no business trading live real money trading account till you can consistently do extremely well over the long term in a demo account. Kind of like, you know, a flight simulator. Before you take a plane up in the air, you log hundreds of hours on a flight sim. Or if you're learning how to drive, you sit safely next to an instructor who knows what they're talking about and has the foot on the brake pedal to help you guys. So great to see so many of you here. I really appreciate y'all taking time out of a Monday morning, our first Monday in December as we get underway. And again, happy holidays. Our family just put up the tree last night. Anything we're using, normally I log it. It's like one of the only times I watch cable TV is I put the holiday music station on cable TV. But this year, I used the Amazon Echo and I said, Alexa, play holiday music, and it lit up and started playing holiday music for us. So that was really fun with the wife and daughter. So anyways, wanted to put us in the holiday spirit, and don't have any presents under there yet. We just put the tree up last night. But thanks, Rich, saying that. No presents, question mark? Yeah, we just put the tree up last night. So that will get filled up between now and December 25th. Hope the markets bring us holiday cheer as well. One thing that I thought I would give you is a couple of PDFs as a holiday gift to fill the stockings. There is a PDF that has an outline of very good professional tips for the live trading room experience at tradingtheopen.com/TTO.PDF for Trading the Open. And also, here is the complete deck of my Las Vegas Traders Expo appearance from 2 weeks ago, live at Caesar's Palace with the sold-out house. We had a standing room only crowd. It was the biggest turnout for one of my presentations in, I guess, 3-4 years. We had people standing up in the back of the room. They're out in the hallway. They couldn't get in. And it was a big room. So we filled up 2 capacity with the big 2 projector room, and very popular on candlesticks and gap breakouts. So get that free PDF while supplies last. Actually, it's kind of unlimited supplies, but just a little holiday humor there as we get underway, folks. We like to cover trading tip sheets. This was for our members last week. We'll have a new one for everybody tomorrow. If you haven't yet joined as a member, be sure to correct that horrible oversight immediately by going to tradingtheopen.com/subscribe. You can go month to month if you want, or you can save even more with a annual membership. So good place to learn exactly how to trade professional breakouts in our market. So anyway, with that, let's get on with it and see where things are headed. For all of you who are new to the live room experience, celebrating 16 years now, which has been quite the epic run. If I was a TV show, we'd be in our 17th season. So we've got staying power. Here's proof. I'm a big fan of proof. Just because someone says something, don't believe it until you see proof. So 16 years in business. As of August, here is my Whois domain registry. This was from last year, I should say. 16 years now. Great to see tradingtheopen.com. I registered the domain and we started the room back in 2000. So, boom. Kicking the competitors' rears. Let's take a look at what the heck is running today, gang. First up, our markets are in rally mode, and the way you can tell that is to pull up the spiders, the SPY, or the E-mini futures contracts chart, and see what kind of directional bias we have before the market opens. I want you to trade markets first and stocks and ETFs second. We always trade markets first, meaning a top-down professional trading approach like intelligent traders do. We use pre-market indicators, not only the futures, but one of my favorites that I've used for many years is the QMI. That's the NASDAQ 100 pre-market indicator. It gives you really good sentiment as to what the directional institutional money flow is doing before the opening bell. So you can see here we ran from 47.48 to 53. I like at least 4, 5, 6 points or better of range in a direction, which we do have today, right? We went 48 to 53, so that's 5 points of range in the QMI, so that's good. I like the fact that our futures are up. And then the last, actually 2 last data points. In market, we follow the ARMS indices, known as the trends. There's a NASDAQ trend and a New York Stock Exchange trend. We also follow the VIXs by looking at the VIX ETNs. The VIX itself is interesting, but you can't trade the VIX, but you can trade the ETNs that track the VIX. So that's why I trade XIV. I also trade VXX and the others like TVIX and UVXY. But anyway, these two are opposites, right? You have exact opposite charts. When the stock market's up, this goes down. When the stock market sells off, this goes up. And conversely, when the market's up, XIV is up. And that's my favorite way to trade the market, kind of like trading an index fund for the stock market for position traders and swing traders. For day trading, I like trading the VIX-tied ETNs like XIV. I'm an expert in these, and this is something you'll learn as a member once you join at tradingtheopen.com/subscribe/. Anyway, what else do we have going on here today, gang? Let's take a look at our breakouts and gap plays. Let's go top down through this ticker list. This is what you see, by the way, each morning in the Trading the Open live room is, unlike other people who will BS traders and say, oh, I'm already long 5,000 shares and I just sold it and I just made $6,000 in my demo account. Yeah, we don't do that. We're honest. So what we do is we post alerts ahead of time. These are the long triggers. These are the short triggers with very specific entries and exits clearly defined so you can follow along with the price action in market. And we don't trade crappy $3 stocks and falsely claim to be trading thousands of shares after the fact and then try and say, oh, I'm selling now because it's going down. And people are saying, what the heck? I didn't see you call an entry. So be a skeptic. Most of the live room operators are BSers and con artists. So many of them have been busted by thankfully, by the CFTC and the SEC for falsely claiming to trade live accounts when in fact they weren't. Just look at the CFTC enforcement rulings and you'll see ample example of the reason for honesty and compliance and the need to do that, as we always have done here. We all do paper trading and demo account trading only to make it safe. Anyway, learn before you focus on trying to earn. There's lots of risk. Day trading is very risky and you can lose a lot of money day trading if you screw up, which everybody does in the beginning, myself included back in the 90s. I blew up 2 trading accounts and made every mistake known to man and then some because I'm stubborn. I don't know how many of you, show of hands, can be stubborn. And or I guess the best example is you're directionally correct, but trading wise you're wrong. So it looks like it's going up, but you get in, you get stopped out, then it runs without you. It really pisses me off. So not a lot of fun. What you want to do instead is figure out which things are actually going to make you money, buy, up at new highs, and avoid false breakouts. And that's what I'm an expert at. So I look forward to working with you in today's live room session. Let's take a look at who else is hot, who's not. U.S. Steel up nicely here at just under 34.40 current resistance. We'll see if that takes out new highs. Let me tighten that down. I'll frequently adjust these triggers, usually tighter to the entry, depending on which way these things are running. CLF is up at new highs. XIV is also gapping up to new highs. Our long trigger in XIV is 43.8. So I expect a false breakout right here. Be just enough to get in the newbie traders, and then it runs down without them, or runs down with them, and they get stopped out. Then it runs up for us at a trigger. So learn the difference. Biotech's up. One way to trade that is LABU, and thanks to one of our traders, Karen, for mentioning the LABU and LABD biotech ETFs. Those are really good to trade right now. They're good day trading. So we'll see if it pierces the 38 whole number resistance. 38.10 is a long trigger for that. For swing traders, we also cover good swing charts. They may not be quite good enough for day trading, but still really good for swing trades for up to a week or two. So we'll look at Pandora Media and see what it does. It may be good enough for a day trade. We'll see where it heads today. But P is one that's worth trading. Another is Freeport McMoran. I like its gap continuation. That's also an ideal chart. That's my favorite chart pattern, is a minor gap continuation. Other people have copied my approaches, but I originated a lot of the gap continuation trading techniques from back in the 90s before these kids were even out of high school. So anyway, let's take a look at what's going on. Freeport looks like we're taking out new highs, gang. We're just under the 1580. We'll see if it pierces 16. PVTB, also a nice momentum runner. A little pricey up in the $50 share range, but I like it because it ran 48 to 50.5, so 2.5 point runner yesterday in that. So we'll see which of these start to take off to new highs in today's markets as we get underway with another live room session here at Trading the Open. It's a real honor to have so many of you here, and I wanted to celebrate the holidays with y'all. So it's the two things that differentiate my room from everyone else's out there is, number one, the training and development quality. I'm a former professional corporate trainer for companies like Rockwell International, McDonnell Douglas, Ford Motor Company. I've done a lot of corporate training with adult learning theory and interactive quality improvement, team-based problem solving, and the rest of it. So I've got a very strong quant. I used to be a corporate statistician and quality engineer and used those skills to be a trainer in large companies. So as a educator of the trading community, I like to bring a very focused, metric, specific, step-by-step, understandable approach with the strongest charts for you guys here in the live room experience. And the other is the performance potential of my alerts. If you take a look at how many of my alerts hit and run compared to anyone else's out there, you'll be pleasantly surprised. We do not look at like the Grinch who stole Christmas. I do not like spam. I do not like green eggs and ham or whatever. I do not like cheap, junky charts. Like, you know, the penny stock traders would be looking, hey, look at that, it's running up. Maybe I'll go 3,000 shares. Oh, I just made a nickel. I'm out. Yeah, I don't think so. The truth of the matter is you got to trade things that have some juice, some momentum that actually, and you don't want to trade the FANG stocks of Facebook, Apple, Netflix, Google, the over $100 a share priced expensive stocks, because they're expensive and the leverage is bad. Instead, what you want are charts that actually have some good price action momentum, like the ones I focus us on here. So that's the biggest challenge you get at as a trader, is what's the best chart out there, or the best high potential breakout trigger points, like these minor gap continuations in US Steel. I've been calling this as a swing trade along the last few weeks for my traders, and boom, it's nicely in the money. We'll see if it continues the madness on up to new highs. We're just about 2 minutes before the opening bell, folks. Great to see all of you here. Hey, good morning, Orestes. Well, thanks, Phil. Let's take a look at Smith & Wesson. Lock and load, baby. I like Glocks and SIGs, but yeah, it's a dumper bounce. I don't like bounce charts. I like breakouts. That one's good for a swing trade. But that's one of the very best charts out there, US Steel. CLF also had some initial momentum. It's doing a mean reversion or pullback to the midpoint, so we stay clear unless it takes out new highs, or we go short if it loses support. So either way, we're ready for that. Markets open imminent in just about a minute. So thanks to all of you for being here. It's a real honor to have a big epic turnout. Hundreds of you here today, so that's cool. Trading Open, the right place to learn good, accurate stock day trading skills. It's tougher than it looks. The main thing I focus on is education and training and getting you up to speed on the patterns, because that's why we're pattern day traders, because the patterns repeat themselves. They don't repeat themselves well for cheap, crummy, pop and drop, penny, under $10 stocks, though. So despite the plethora of young, barely out of their teenage years, kids out there trying to hogwash the industry by saying, no, let's trade a $3 stock, it's going up 10 cents. Don't do that. That doesn't work. What you want is things that are highly liquid with volume and volatility and price action moves where, you know, the potential is up to 50 or 80 cents or better, not things that only have a 10 or 20 cent trade potential, because you'll get chopped out in the noise if you trade cheap junk stocks. Here we go. Ding, 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 ding. And the markets are off. They're out of the gate. Let's see who we got. Lucky 7 on the 5th. Oop, wrong channel. Let's see what's going on with XIV, taking out new highs. XIV, our first long trigger is 43.8. Not going to get there anywhere in the next 2 or 3 minutes, but worth keeping on the radar. I'm going to stay out of a chop zone and in on a continuation rally. So we'll see which of these heads up to new highs. And if any of you see anything out there that you think is worth taking a look at, let me know. Always good to plan ahead. I like to use position sizing. I'll only scale in once on a day trade, but first entry would be 34.7, second would be 35.20. For experienced traders only, a loss of the whole number support, short trigger would be 33.80. So if it gets under that 4 and drops, that would be the short trigger. If it continues on up, the long trigger's up here. This is the time where I need to be most intensely focused on the market because I need to see who's getting some early price action breakout moves. G3 is starting to take out new highs. 28.8 is the long trigger. Keep an eye on that in case it hits. 29.20 would be a second long trigger and a second chance entry. For so many years, traders have told me the main thing they value in the room, in addition to the alert quality and the success of those, is the training quality and the explanations of reasons why entries and exits are posted live in real time. If you do trade cheap under $10 stocks, that's the kind of pattern that would make sense. 720, we'll see if we build a head of steam up there. 6.7 on the short side, but we'll see if ASNA takes out new highs. But those are low odds charts. These are not good breakout continuation chart pattern. It's got plenty of range, which I like for a $6, $7 stock. It's got 1.5 points of range. But I prefer charts that are priced $20 to $40 a share to see if they're able to take out new highs. Click through these charts and see who's getting some early buying and selling pressure. As professional traders are always scanning through our leaderboards and percent gain and loss with high volume. Who is starting to get an early lead? That's a good chart. Swing trading long alert if it gets over 10.3 in AKS. It's a good high volume breakout. Freeport McMoran, again, that's on our swing trading list. If it breaks over 15.8, coming up soon here, that may be good for a breakout trigger. Freeport currently taking out new highs. Next long would be over 16.1. If it gets over the whole number resistance. Always good to have a sensible, rules-based approach with very good, strong breakout candidates that are the most likely. That's what I do, is the most likely candidates to succeed. Kind of like the class rankings or whatnot. We're looking for what are the most likely stocks that are likely to keep running up in the market. That's what you make your living at as a day trader. Is you're looking at which the momentum runners, institutional guys, are likely to pile into. As my charts start to run here, we'll start to see where things are headed. You should pressure yourself as a trader to be mostly done by 10, maybe 10:15 at the latest. CLF is trying to break out to new highs. Keep an eye on that. If it gets over 10.3 later, we anticipate a stall any second now as it gets close to previous resistance. We don't want to fool around with it now. But if we do get a nice momentum breakout, that one may be worth a shot later. ASNA 7.2 is the inside. This is what I call an inside chart. If you're new to the room, skip these because they're riskier. Inside charts are much riskier than out charts, which are at 2-day highs because institutional high-frequency traders come in with OHLC-based algorithmic dark pool trading at breakouts above previous day's highs, which is why we like gaps because they tend to get more price action movement than inside charts. But wide, highly volatile charts like this one that had, a big range are worth taking a shot at if it takes out new highs. So 720 is our long trigger. See how we dodged a bullet at the 710. The newbie traders would buy a 10 and then get stopped out. Professional traders, I'm saying wait till it breaks 720 if it does. Or the short trigger down here at 6.7. Similarly, if it starts to drop, newbie traders would go short at 6.90. Maybe it goes down to a nickel below that and then pivots back up and then gets stopped out. Professional traders, we want to see significant volume and volatility come in, which is why we use these triggers outside of the false breakout regions. That's something that took me many, many years, almost 20 years, to figure out the difference between false breakouts and ones that actually tend to run most of the time. And so that's one of the key learning objectives for all of you here at Trading the Open, is to learn the difference between how to set triggers for false breakouts and dodge a bullet and get in on the ones that are actually strong enough to have some momentum as well. Harley Davidson starting to race down the highway yesterday to the downside. This one would be a better play on a short under 60. Earliest long, let's hit it at 60.4. So the reason for that is I want it to go up just a bit further. If it keeps going up, that may be good for pivot long. Starting to get some buying pressure. So 60.4 is the inside range long for Harley Davidson. Short trigger would be under the 60, and I'll be conservative. Let's do 59.80 on the short. So you see my approach is you identify the highly volatile charts that have the best price action ranges, and then set your entry triggers, both long and short, right outside the immediate support and resistance. You don't try and chase stocks. You never ever chase stocks. Hey, it's running, let's jump on board. That's how you blow up your trading account. Instead, what you want are charts that are likely to continue after you get in. That's kind of the trick. It's not ones that are just starting to run that you jump into. As a day trader, you're always looking for continuous breakout runs that are likely to keep going at least 30, 40, 50 cents after you get in, so you can make a good exit. Another quick tip for new traders who are new here. One of the strategies that I developed many years ago is what I call my 20-cent rule, and that's once something is run in our favor by 20 cents or more, you sell half and then put a stop at break even on the rest. This handy breakout table gives you specific, like a running tally of current charts that are worth taking a look at, our focus list with specific prices. How many of you agree it's important to know where to trade something ahead of time? Just a show of hands. And the reason I ask, it's kind of like a rhetorical question, but feel free to ask, how many of you value the fact that it's a good idea to make anybody that runs a live room have well-defined, well-explained, specific entry triggers laid out ahead of time? Only the best traders can do that. All the people who try and BS and con people, they claim that they're already in long and now I'm selling. Oh yeah, well, I didn't see your entry there, buddy. A lot of BS out there you got to watch out for. Or people that'll just generally talk in general terms about charts without specific entries. Generic vague charts, I guess it's entertaining if that's all people do, kind of like talking heads on TV, so I guess there's some merit to it, but I think it's much more valuable to have specifics. We have specific details of entries and live exits called in terms of where to lock in a gain or how to take a break-even stop. I'm a big fan of break-even exits, so if something runs up for us 20 cents, we close out half and trail a stop at break-even on the rest. Well, thanks. Oh, hey, Rob saying HES is dropping. Let's take a look. That's a good breakout chart. It's in my list up here. Pulling back a bit, but it's still strong. I wouldn't go short. But thanks, we'll keep an eye on it. Because it is an out chart, which is good, right? Those are the best charts, or ones that are... Your highest odds charts are always going to be ones like that one, where you're up at a new high. It already ran a bit. I would wait till 59.6 on a short, because I expect it's going to do a close to mean reversion pivot here. 60.2 would be first long, 60.7 on a secondary. No, by popular demand, I'm trying to keep most of the coverage of the charts here down in the $20, $30 a share range. That's why you see most of them at. But yeah, occasionally you'll see some good plays up in the 60s, like Harley Davidson or HES, which is Hess Corp. Okay. But yeah, it's a good chart. Thanks. I was getting so many great charts from you guys. There's such a big team of smart, well-trained traders here. It's good to have eyes and ears as a team on the market, which is why we've got so many traders here. So keep an eye on Harley Davidson. It's starting to go zoom, zoom, zoom down the highway. I was used to see these Harley motorcycle clubs on Sunday afternoons, and it's really neat to see all the guys, mostly middle-aged guys or whatever, but out there having fun with their Harleys on a Sunday. So it's like a national. Anyway, and a good quality turnaround story from American industry, by the way, too, and a branding expert that they've built a great brand. Anyway, not that we care about all that stuff. We just care about, is it going to break the 64 or not? So inquiring minds want to know. We're going to see, boom, if it takes out new highs, yes or no. What we don't do here in the room is sit here and watch paint dry, like, okay, let's follow this one for 10 minutes. And then in the meantime, 3 others run up without us, right? That's what you do not do as a day trader. As a day trader, professional day trader, I run Day Trading University. The expert in this field, what you're looking at is putting the market under surveillance, kind of like having security camera footage. Like in Vegas, you've got all the eyes in the sky. More security cameras per square foot than any other place in the world is Las Vegas, which I like. I feel safe in Vegas. Anyway, the point is you're looking for outstanding candidates that are really starting to run. We got some quiet markets here. Big picture market hasn't gone anywhere, which, by the way, is another reason why I do not like trading the E-minis, because they are choppy and nearly impossible to trade. What all the bogus educators in the E-mini industry will do is they'll only look at, they kind of obscure the fact that they're trying to pitch people on selling crappy, low odds, choppy instruments by zooming in on a 1-minute chart. Hey, look how big that's running. Wow, what a big run. It's a deception, because the truth is, take a look at a 2-day chart for anything you're trying to trade. You have my word, that's extremely important. Put it in context. Look at a 2-day chart. I've been doing this nearly 20 years. Is it worth trading? I would say no. Look how choppy that is. You're just going to get your account blown up if you try to trade the E-mini futures because they're so freaking choppy. I mean, yeah, you can try and hunt for 2 or 3 ticks here and there, but what's the point? It's a chop, chop, chop instrument that's no good. I prefer things that actually run, like say this, boom. So it's so important that instrument selection, there's the last 4 or 5 years to kind of cater to poor people. There's been a whole plethora of bad odds live trading rooms out there of people that are specializing in leveraged instruments like the E-mini futures and penny stocks. The problem is leverage works both ways, and it's particularly deadly when you're trying to trade cheap, choppy, zigzag, pop and drop charts like penny stock traders or E-mini futures or that kind of stuff. What you want to trade are things that actually have some momentum behind them. XIV and have trade potential that actually like to run. XIV's taken out new highs 43.8 and again at 44.20. I always like to use a quarter point or so above whole numbers. That's the classic floor traders approach. Quarter points out of range to get outside of, say, runs to 44.10, chops and drops. You want to avoid that. You want to get in if it does take out 44.20 later in session. Now, one thing that I also specialize in here is tape reading, and I published the original industry article on the tail of the tape over a decade ago in the now defunct Active Trader magazine. And that was my first topic for at that time it was called the Online Traders Expo that my colleague Tim Berkwin co-founded back in the late 90s in the year 2000. I was the first person to speak on tape reading, 16, 17 years ago. And what we look at is a nice close-up, big tape where it's easy to follow price action as real trades are going off in the market, along with a close-up 1-minute candlestick chart. I'll explain so you can see exactly what to look for as these things skyrocket on up to new highs. And it's exciting. I always get a thrill when I see a 2-day high breakout. In the tape, we're looking for specific signals like a speed up in velocity. You're looking for an increase of block trades. Looking for an imbalance in the sizes column to see if bidders come in significantly to punch it on up to new highs, or if it stalls out at a key resistance area, like the 80-cent mark. So you really want to keep a close, careful, keen eye on what's going on in time and sales, in addition to your close-up 1-minute candlestick chart. That's a microscope on price action in the market. There's nothing finer than this. You have my word on it. It's the best way to follow price action is a nice close-up tape. Of course, the people trying to trade penny stocks don't tell you that, because if you were to look at their tapes, it would be very slow and choppy and wide spreads, and low float instruments are death to traders. So you can't trade those cheap stocks. You need to trade instruments that actually have some juice and some momentum. And that's revealed not only in the 1-minute candlestick chart, but in time and sales. And it's really vitally important you become an expert in tape reading, which is what I teach you in Trading the Open. And it's a bargain for the time. You get, over 15 hours of training with me for just a couple hundred a month. So that's a lot. I used to charge $4.95, and a lot of members at that price point, because it's a premium experience. But I dropped the price significantly because I wanted to reach more traders, and our membership numbers have skyrocketed. So anyway, great to see everybody here. Let's see if this continues on up over the 43.8. Coming up in just a minute. Let's see who else is starting to run. Pandora's trying to get a lift up here. That's an insider. Straight momentum play would be a breakout over the nearest dime at 13.30. I know that's soon, so sorry for the short notice. 13, but it looks good for a breakout. 13.30 and 40 on the breakout. You can scalp it at each dime. 12.80 and loss of support if it goes short. The key to professional day trading is look for charts that have wide open range previous day's breakouts, and then see if we get a price projected similar price action or a fraction of that or part of that in the current trading day. And we use previous day's price action. For example, you may have seen my article in this month's issue of Stocks and Commodities magazine on mean reversion swing trading. Here's an example of a mean reversion day trading, what I call also 1, 2, 3 chart. It moves up, pulls back down to half, and then resumes its initial uptrend. Here we're still in leg 1 of a cut breakout, so we'll see if it does the 1 of the 1, 2, 3 coming up in today's markets. These are other ones that are kind of waiting for a breakout. It's good to have those on the radar in case they do start to break out to new highs, like Ascena Retail Group is starting to do here. ASNA, the ticker 720, the long trigger, if it hits. This is how you're supposed to learn how to day trade stocks. You have my word on it. That is extremely important. You learn the difference between all the nonsense kids out there trying to hawk penny stocks, or these scam artists trying to tell you guys E-mini futures are the way to trade. I would beg to differ, right? Look at the E-mini chart. It's only now finally starting to move. It moves it just a little bit, suckers in traders, and then it collapses, right? Let's all go long. Oops, crap, we got stopped out. Yeah, so don't trade charts at chop. That's kind of rule number 1 is use small stops. Rule number 2 is combine set approach with the very strongest, highest potential breakout charts that are likely to run. And make sure that one thing that I like to teach, and I certainly encourage you to learn from my colleague Steve Nissen, learn how to use 1-minute candlestick charts as part of your day trading approach, because often you'll see things like hammers, shooting stars, bullish and bearish engulfings, 3-line breaks, doji, and other patterns that give you clear trading signals when combined with my momentum patterns as taught with time and sales and with the previous resistance and breakout triggers in our current chart. So it's all good. Hess is starting to drop. 59.60 the short, we're almost there. May do a 1, 2, 3 though, so it's a bit risky because it's getting down to the 50% mark, but 59.6 would be the first place I'd look to short this, because it's such a strong chart. It's risky to go short a strong chart, kind of like the opposite of catching a falling knife. So for that reason, we stay out until it proves itself and it shows its true colors. We're still kind of waiting on things. Mondays tend to be the choppiest, worst odds day of the week to trade, which is why I generally don't run the room. Harley Davidson starts to run up, so that's good. If anyone got a piece of the action, you'd be selling half now, trail a stop at break even on the rest, right? I said to go long at 60.4, but did you listen? No. But if you listened, you'd be in the money. We're in the money. Ka-ching. But you should be selling some of it now. Pigs get slaughtered. So don't be greedy and say, well, maybe to run to 62. Yeah, maybe you get puppy dogs and rainbows for Christmas too. But the rest of the world, in the world of real professional day trading, we're starting to lighten up the position. You don't have to go all cash. If you're a new trader, go all cash now. Sell it all now. Sell, 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 Mortimer. Sell it. Get out of that puppy. Take that money and run. Booyah. In long, out here. That's a day trade. Okay. Now, if you're an experienced trader, sell at least half now and let the rest of it trail a stop. I'd let it ride at break even at 64. So take a little profit before the market takes it back, because it surely will if you screw around and wait. Day trading's not for mentally slow people or slow action people. It's very fast. Anyway. And see, that's a good example of a specific walkthrough. That's albeit it's a small 20, 25, 30 cent winner, so it's not a huge epic win, but it's a start. And it's a hopefully well explained entry and exit that worked out correctly live from start to finish. And I'd hit this puppy again up at 60.8. We go in long if it takes out 68 internal resistance to the upside. And that type of entry and exit, your goal as a trader is to make money. And while you're doing that, you want to, while doing said activity, you want to minimize any stops along the way. XIV is starting to take out new highs. See if we break clear the 43.8. We're headed up. Markets are finally taking off. We're finally getting a continuation. Let me know, traders, too, if you see anything else. Let's go, hey, thanks. Let's see. The rest is telling me Salesforce. A little pricey, but yeah, it's a good chart. And I do realize the fact that there are some people that like cheap charts. I think you're much better off served trading the right, paper trade. It's much smarter to at least paper trade charts that actually run in the 50 to 70 or 20 to $40 share range than it is to live real money trade stupid choppy instruments like E-mini futures or under $10 pop and drop one hit wonder stocks. It's better to paper trade and learn and take the time to learn the difference between what works and what doesn't, rather than overtrade choppy, junky instruments that are peddled by dream merchants out there. I'm very protective of the trading industry and of my traders, and I want you guys to focus your energy on learning the right way to trade rather than any other approach. Pandora, my 1330 is also now in the money just a little bit. Boom, flawless victory. He shoots, he scores, the crowd goes wild. They're on their feet. Go Ken. Boom, 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 boom. Crowd wave. Had a little fun here on a Monday morning, gang. Hey, we're in the money, but use a break-even exit. If it screws up and goes back down to the entry, you may scalp out a little bit here if you want. It's not going to be good for a whole lot, maybe a dime or something, right? But this is the key decision point that you have to make as a trader. You're in the money a dime. What you don't do, what I used to do would, well, maybe I'll give it down to 13 support, and that grinds out your account. What you do is instead, I got you in at 1330, I say sell a little bit now because we're in the money and trail a stop at break even on the rest. So you're playing with the house's money, gang. You're not sitting there screwing around saying, well, I've got to give it down here to support for a day trade. Epic fail. No, you use what you got in at as your exit, so that you're skating in and out. That's what we call a broker special, because they're happy they get their commission on an in and out, and we're scratch. Or take a little profit off the top here and use a break-even exit. I'm a master of break-even exit calls in the live room because I want to protect it. I want you to develop a sensible, intelligent, very focused, strategic approach where I get you guys in on a good winning breakout, and you should always be thinking in the back of your head, how is the market going to try and screw me over next, all right? Because it happens all the time. Thank you. I appreciate the applause. You are right. So does that sound familiar? The charts are going to screw you every single chance they get. And it's not like they're in it to they've got something in for you or whatever. It's just the nature of price action, the nature of the beast, okay? I got you guys in long at 1330 on Pandora. It's a cheapie, but it's starting to run. That's a good winning day trade call. Live at TradingTheOpen.com. Celebrating 16 years in business, one of the most widely trusted educators and live room experiences in the world. We do not do sub 10, generally don't do sub $10 pop and drop cheap stocks. Make sure that you get your access to this so you can get, look over my shoulder as I intelligently explain, just as I do when I do my live Las Vegas Trade Mastery seminars. I always, get a good turnout and lots of testimonials because what I teach is very professional and very well thought out and very intelligent. I'm a UCLA graduate. I'm a certified quality engineer nationally. I used to be an international quality management consultant for big companies. I turned my attention to trading because the older I get, the less I like dealing with people. I don't know if you're like me, but there's a lot of morons out there in the world, and I would prefer to click away with my mouse and make my trades for a living than deal with corporate politics like Dilbert, which is a brilliant cartoon series. Dilbert is the reason why all the truisms of the Dilbert universe are very accurately why I got out of that rat race. So it's much better to be truly have your own financial destiny in your own hands and not at the hands of other people. So be the master of your fate, the captain of your destiny. Enemy fighters coming our way. Chewy, get us out of here. The reason I say that is because we're at a previous day's resistance. So for that reason, new traders sell it all now to the buyers. Everybody else, we may get a bearish engulfing here, right? Sell doji bearish engulfing cycle here. Sell at least half now. Trail a hard stop at 1340 on the rest. Lock in a profit. Now's a good time to sell because we're at a previous day's high. Now, granted, these aren't, today we're not looking at big 80-cent wins. It's a Monday. We don't usually get big winners on Mondays. But it's a well-defined, very accurate, correct winning approach that you've seen as proof, as evidence of the alert performance working out, right? And that's the kind of thing that I hope to get you up to speed on once you join as a member, if you're not already one of my legions of members. Alcoa. And I don't always use sound effects. I'm just doing that today because I got such a big crowd. I told you guys long at 29.50. How much money would you have made had you taken my 29.50 long call? We're up near 30 cents. Epic win. Sell half now. Trail a hard stop at break even on the rest. Am I proving myself? The validity of my techniques? The no BS, honest, accurate, mostly works out approach? And I hope that by looking over my shoulder, I get you guys up to speed on not only the profit potential, but the potential to minimize loss and the potential. Again, I can't make any profitability promises, nor do I. Most traders lose money, and it's a tough thing to do. But I do like to promise that I give you my very best efforts to give you live alerts here. So many thousands of traders have learned from me that actually do run a lot of the time, right? And just as importantly, the reasons, the rationale behind the entry, and probably even more importantly, the reason for the exit. The reason why I say now is a good time to lock in a profit, because we're right under an 80-cent. We use the dime increments, 70, 80, whole numbers, and all that as resistance triggers. So if you're a new trader, take that money and run and sell it all now to the market. Sell, sell, sell. If you're an experienced trader, sell at least half of it and trail a hard stop at 29.70 on any remainder in Alcoa aluminum, running up nicely in today's markets. See, that's kind of the trick to day trading. You got to figure out the charts ahead of time that are most likely to run and leave everything else alone. That's why you should not be trading E-minis or cheap charts, because that's crap. What you want to do is trade good charts that actually run. So at 60.20, we're almost there, almost at 60.20 on the breakout in HES. Keep an eye on that. 60.2 long in HES. Thanks to the trader for heads up in that. U.S. Steel not going anywhere yet. I'm going top down through the alerts. See where they're headed. 33.8 the short, that never hit. See, it pivoted right ahead of that. It kept you guys, we dodged a bullet. 33.8 the short didn't hit, right? I'm an expert at avoiding false breakdowns or false breakouts. It's one of the more critically important skills, in addition to tape reading and 1-minute candlestick patterns you learn from me here in the live room experience. You don't want to day trade without me. I'm the right guy to learn from. Now that our XIV is taken out to new highs, put a break-even stop on it. Just because it's starting to head up, don't get too optimistic, because we're at a 10 o'clock pivot time, and often the markets will pivot at the 10 o'clock. So for that reason, we're still in, but nervous long, and we put a hard stop at 43.8. So, that's my idea of a bad trade is a scratch trade, not a stop. I like to avoid or get rid of any approach for stops and use break-even stops as the rule of thumb around these here parts. That's what we do for our traders. That's why I got so many thousands of people have been with me over the years. What else we got going on here? LABU 3810, we're in the money. Paching. Thanks again to Karen for heads up on that one. I wouldn't have known about this one unless it was for you, so thank you. Let's sell it all now because we're starting to get a pivot. Or at least sell. Experienced traders sell half. New traders sell it all. We're in from 3810. That's a 40-cent winner. You can applaud at will. Did I have any stop outs today? Any. Audit my performance and look for yourself. Freaking amazing. Again, good against remotes is one thing, good against the living is another. To quote Han Solo in the original Star Wars movie, it's doing it on paper is one thing, but you have just like the CFTC note is completely accurate. There's a lot of slippage or late fills or missed entries that you suffer when you do live trading. So the main thing is get up to speed on the patterns by doing paper trading, but realize that that doesn't necessarily translate into what you would be doing had you traded live. Say you might not have got the fill at 38.10, you might have got the fill at 38.15, and if you try to sell now, maybe you don't get an exit at 38.45, instead you get filled at 38.40. So there's a lot of significant slippage involved in live real money trading that the chat room operators don't tell you guys about, but I'm completely transparent and honest about that because I want you guys to be equipped realistically for accurate intraday trading, the best breakout charts in the world, like we do here exclusively at the Trading Open live room experience. What else do we got going on here? LABU, paching. Does everybody see the pattern? We didn't guess at a bottom down there. My short trigger is 3640, which brilliantly was right outside of, it's just amazing, right? Thanks, I appreciate that. 3640, amazingly right outside of the false breakdown region, right? So we didn't get short there. My long call in this one was up at 3810. I was kind of a skeptic. So we didn't get this big run here. We got in starting right there, which is more conservative, but worked out extremely well, right? Because if you bought my 3810 long, you're 64 cents in the money. Boom, like a boss. You do not want to trade alone, and you do not want to trade with moron deceptive people, which are the rule of thumb out there in the trading industry. You want to learn from a guy like me who's honest, who tells you guys how it is. It's very tough. There is slippage. You should paper trade, at least double a demo account before you even consider live real money trading, and be consistent at practice trading. And here we all do, it's 100% demo live professional, like you get a live day trading seminar with me each session. So even on a Monday, a rockstar alerts, right? I mean, just look at the performance, and it speaks for itself. It would have been hard to lose money taking any of my alerts that triggered today because they all worked out. So anyway, and by the way, too, gang, make sure that you're not using some browser-based broker or cheap charts to day trade. You're competing against the best and the brightest minds in the world. And you don't want to bring a knife to a gunfight. You want to trade with a good professional chart software. I use eSignal. Also, I'm a big fan of the other charting platforms out there, whether it's other channel partners I've worked with like TradeStation, Metastock, and NinjaTrader. But have something good and professional like that in your hip pocket. And I like using interactive brokers because they get instant fills and very low commissions. None of this $6 commission nonsense like other places have. So interactive brokers, for many years, rated the #1 discount broker in the world. That is what professional traders use. You might want to think about it. Now we're at a whole number resistance area, right? LABU, what a big epic win that was. We're almost a point in the money, gang. Boom. Do you see why I like charts in the $20 to $40 share range? It's because they work. So we got in at 38.10, but we have a couple of red flags. Trail a hard stop at 39. That's my official call. Sell it all, Mortimer, if it gets under 39. And watch a great Christmas movie like Bill Murray and Scrooged. I watch that every freaking year. It's a hilarious movie. And touching, too. It's a great movie. Scrooged with Bill Murray, my favorite Christmas movie. Huge fan of Bill Murray. Sell it all. We got a block trade at 38.99. Sell it all now. Sell, sell, sell. Take a huge, almost 1 point profit out of the side of the LABU. And that's how you day trade, folks. And yes, you can applaud. They're standing up loud. They're standing up. They're cheering out loud. Standing ovation. It's great to hear all the applause when I speak out loud. Don't really. Now, it keeps running up. Now, do we get pissed off we took a 90-cent profit? Not in my world. I take a 90-cent profit, I'm doing a happy dance. I'm yelling downstairs, hey, honey, guess how much I won today? She's saying, "Omedeto ken-san." My wife's from Japan, so I speak a little Japanese. I usually don't understand what she's saying. I understand how to trade, though, so anyway, I got you guys in at 38.10, out at the 39. Any questions? That's how you day trade like a boss. Live call, posted ahead of time, and exited correctly at the right time. We didn't get the exact bottom. We're not going to get the exact top. We got a nice big meat in the middle, the chunk in the middle there, almost a one-pointer. And that's how you day trade the stock market. That's the best odds type of approach I found. You get a minor gap. You might have seen my article featuring Harley Davidson as a chart in an earlier issue of Technical Analysis of Stocks and Commodities, in which I explained that there's a Harley chart where we had a bullish cup at a gap high breakout. And that's why I posted the long here. We sold because it was near a whole number resistance. Now, we don't get extremely annoyed if it runs up to like 50 without us. I'm happy taking the 90-cent profit and banking it. That's what a professional trader does. You're in the profit extraction or the money extraction business. You're in the risk management business. You're not in it to try and guess tops and bottoms. You're in it to get a big significant piece of the action. And that's how you do it. What else we got going on here? Who else is starting to move? Let me continue through these. Salesforce starting to break out. Isn't holding highs yet. G3 is headed up. 28.8 also in the money. If anyone took that, that's a 40-cent winner. Muhaha. And 29.20 also in the money. Please compare my performance with anybody in the world. I am the best at training people how to day trade the stock market, at least in my own humble opinion. I've not seen anybody post these kind of performance triggers and get the entries and exits and the professionalism and the training explained as well as you've seen here. And I really appreciate all of you being here, right? It's nice having hundreds of folks here. And one of the things I would encourage you to do, while I still have the room open at a insanely low price, is to subscribe. I will answer all questions coming up, but look at yourself, look for yourself at the performance of the alerts and do the math on, had you taken these alerts, how much could you have potentially won? And also, what would you have potentially lost if you had, if you had missed an alert or not gotten it in right or something like that? What would be your own personal approach to trading the markets with the alerts that you got here today? And we'd be mostly done for today. If I were live trading the market, I'd be wrapping things up for the day. That's the difference between professionals and amateurs. Amateurs trade after 10, professionals trade the open. Hence the clever title of my 16-year successful live room, Trading the Open. That's what we do. We don't trade the close. We don't trade the 10 o'clock reversal. We don't trade the midday chop. We don't trade the Monday and Friday shoulder low volume days. Though today we did championship breakout trigger alerts, but we like to trade the sweet spot of the midweek opens, Tuesday, Wednesday, Thursday mornings. That's all you need. You don't need to be here all day long trading choppy markets, because it really pisses me off if I'm up like say $600 in the morning and then I overtrade after 10:30, which I never do anymore, but I used to, and then I turn what had been a $600 winning day into a $115 winning day. It really disappoints me. And so what I found is, take the money, hit and run. Just be a hit and run trader. Wrap things up by 10 or 10:15 once you make your winning open range breakout and gap plays, and then finish up. You don't want to be addicted to the markets and mindlessly, like a zombie, looking at charts all day long, being frustrated, taking big stops and small wins. That's kind of the cycle of doom that traders get into. Your goal is to take as close to break even or super tiny stops, like I teach you how here, and modest wins along the way. And even then, be very conservative and get out soon. Like LABU, I got us out at 39, and sure enough, although it did run up a little above the 39, we have a bearish engulfing. And again, learn from my colleague Steve Nissen, because the patterns he teaches works. You should absolutely be a member over at his candlecharts.com site. I've learned so much from Steve in the 1 minute candles. I got us out because of whole number resistance, long before I saw a candle pattern. But the candle support is also right near the 39, right? It's around 39.05. So kind of convergence there between the voice of the East and the West. The loss of the bearish engulfment would got you out there. I got us out in anticipation of a whole number resistance a bit early. So it's all good. I got us in at the 38.10. That was my long call. Like a champ, it worked out. One of the patterns I teach all of our members here at Trading the Open is this 1-2 momentum candle pattern. You got a small whole real body, like baby bear, mama bear, papa bear, small itty bitty baby candle that matures into a larger momentum candle, and then going long above that. My long call was during it because I got in a bit early for you guys. But anyway, that candle pattern, even if you miss the first entry, you get in subsequent to that, worked out like a champ. And that's a day trade entry and exit. And that's how you day trade the markets the right way. I hope I've been of service to y'all, and cleared up some myths and misconceptions. The right charts, like this one I called long for you guys at 28.8, which is now up 60 cents from my call, trail a hard stop as a default at the nearest 10-cent increment, which I would use, say, 29.3 here, just under the current resistance at the 40. So trail a hard stop, folks, at 29.30 if you got in at 28.80. That's a 50-cent winner. Boom, winner, winner, chicken dinner, baby. We're in the money. And that's how you day trade, like a champ. Notice, please, the conspicuous absence of stupid $3 stocks that moron kids try and foist off as day trades. Look, I'm on long 3,000 shares, and I'm selling now, and I'm taking a big, huge profit. No, I don't think so. I call BS. Let me see your tax return, buddy. Let me see your Schedule D. Anybody who claims to trade penny or cheap stocks, let's see your Schedule D and see how much you make trading versus selling the dream to traders. What will you hear? I think crickets chirping. So anyway, ignore the rest, learn from the best, and I hope that I can be a part of your own success as well as we continue the madness on up to new highs. 720 in the money here from that ASNA. Interesting, the insiders were the big group of winners today. But use a break-even stop. Say, this thing's going to screw me at its first chance. So kind of like going out with a woman of dubious character from a nightclub. You know it's going to end badly, it's just a matter of when. So what you do is you play it for the breakout, and then you walk out. Don't let the doorknob hit you on this way out, sweetie. It's likely to misbehave. Okay, so put a hard stop at 720. Play it scratch, gang. If it gets back to the entry, get out at break even. So we're playing with the house's money now, and that's nice. It's only a few pennies, a nickel or so. But that's so important that when you're kind of deer in the headlights, you wonder, okay, I'm in, it's what now? The question, the number one thing is preserve capital. So just use a break-even exit. If it doesn't run up, okay, it's a crapshoot, didn't work out. It's a scratch trade. If it keeps running up, good, but use a break-even exit. Don't say, well, don't kind of justify to yourself, well, I got to let it go down to 7 and that'll be my stop, or 670 or 620 or 570, that'll be my, no. Use a break-even exit. If it's wrong, it's wrong. The price that proves the trade wrong is a recovery back to break-even. So if it loses or gets back to the 720, we get off that boat at scratch. And the scratch trade's highlighting gray. It hasn't gotten back to scratch yet, but I'll be conservative. So if it gets back to the entry, scratch it out. Everybody got it? Let's audit my performance, shall we? HES, short trigger 59.6 has not hit. Secondary long at the, or I should say primary long at 60.20 has not gotten over that yet. So that's still waiting. US Steel has not hit any of the triggers. CLF, did we hit the short yet? No, it's way down in the 950. So we're clear of that. 1030 is the long, 950 the short. It's just still kind of grinding around. This actually would be an okay bounce trade here, but I'm not going to make that an official call because the volatility isn't good. If it recovers that bullish cup or bearish cup, pivot support here, but it's not worth taking a shot for a 10 or 20 center, so we'll scratch that or not do a trade in that unless it hits my official calls. Let me know if any questions, folks. Let me finish going through the alerts and seeing where we're at. XIV, I got you guys in at 43.8, and that's in the money. If you took it, congratulations. That's a 20 center at least. Sell half of it now, put a stop at break even on the rest. Next long if we get over 44.20. I had 0 stops today. I mean, just audit the performance for yourself. Amazing. Compare me to anybody. It took me 20 years to get here. I'm a former corporate statistician and a nationally certified quality engineer at Ford Motor Company. So I got the charting and quantitative background and the numbers up the yin-yang. And so that's what I bring to the markets that nobody else can. Who else is a former official corporate statistician for Ford Motor Company like I was? I don't think so. Nobody. Anyway, I got a corporate background. So very intelligent, extremely Look at the accuracy, right? No fudging, no BS, no after the fact calls, no wish-wash dodging, no amateurish behavior like you see in the other live rooms out there, right? I mean, just, you got to give it up, right? That's how you do it. Anyway, Salesforce, thanks to the trader for heads up on that. It's starting to work out, so that's cool. We're up 13 cents. What's the default? Put a break-even stop in. So you're in the money 13 cents. And that's kind of interesting. It's not going to pay off the mortgage. So you're able to close out a little bit now to take some profit. But main thing is put a break-even stop on this because we want at least 20 cents out of it. That's kind of makes it worth my while. So kind of like if you're a shark in Shark Tank. For that reason, I'm out. Well, we're in. We're going to see if it keeps going up, but I'm not excited. It's only like a 5% equity stake at a high valuation, so it doesn't get me out of bed in the morning, doesn't wake me up. I like Mr. Wonderful on Shark Tank. He busts me up every time. These are your soldiers. You put them out there like dollars and you want to bring back more. So anyway, I'm going to see where these guys go. Got you guys into Salesforce. Thanks much to the trader for telling me. And thanks, Arrested, saying you're the best. I haven't had a chance to look at the alerts yet. I'm sorry, at the post yet because I'm focused here for you guys. At Salesforce, I got you in. Customer relationship management software producers, #1 in the industry. Anyway, CRM, if you guys got in at 70.30, that's in the money, just about 15 cents. So pretty good for breakout. Yeah, you may want to sell half now, but main thing is use a break-even stop. If it misbehaves and comes back down, I don't want you taking any stops. I want you to use break-even as your default setting for stops. So something starts to work out, you may want to take a little bit of profit to make it worth your while, once it breaks 10, 20, 30 cents, but use a break-even exit wherever possible. It's so important. You don't want to be trading thousands of shares, taking huge stop losses like people do that blow up their accounts with the cheap charts and the penny stocks and the under $10 crowd stocks. That's really stupid. What you want to do is trade these kind of charts. All right, G3 triggers worked out. ASNA still slowly uptrending, so that's good. Harley Davidson, we got in and out correctly for you guys with that one. Alcoa Aluminum did good for its breakout. My long call was 29.50. Boom. I got us out near the 30, right? And that was a good exit. Looks like it continues on up, but I wouldn't touch it this late in the day because we're already at quarter past the hour. So I'd book the profits and be done. And that's how you day trade the markets. Now I'll answer any questions. Just a reminder, a couple of free PDFs. I got a lot of new folks logging in here just now. Let's take a look here. They can't compete with this, right? Compare my performance. You got people out there trying to pitch $3 stocks and penny stock crap. You don't want to trade that. You're just going to get in trouble. It's so much smarter to trade even just 100 shares of a stock like this that runs a point, than 1,000 shares of a $3 stock. It costs the same amount of capital, but look at the sustainability and the breakout performance of this, right? Those are the kind of charts you want to focus on. Now it's all the other live room copycat competitors who are logged in here. They're copying my alerts, no doubt, and it's like their best day all year because they copied me, right? You've seen the rest, learn from the best. I got you guys in here. Do the math. Any questions? Let me answer questions now. I got a lot of them here. Let me go top down. Let's see, traders tell me JetBlue is running earlier. Long time ago, thanks. Got various tickers that people are asking about. Question from Juan about XIV is up and the market's up. Well, that's correct. XIV goes up when the market goes up because it's the inverse VIX. So XIV will rally, which is why I had us go long at 43.80 and then out near the pivot because the market's up. So it goes up when the market goes up. VXX, on the other hand, goes up when the market goes down. Maybe okay for a pivot play here. The market softens up a bit. So VXX long if it gets over, what, say 27.60, the nearest 10-cent increment. And short if it gets under 27.30. But y'all have been so gracious. I appreciate all the kind words. I haven't read off all the comments or anything out loud, but I appreciate the kind words because it took me a lot of years to figure out how to day trade the market the right way. And in my best estimation, this is it. You know, you're trading these types of charts that actually have really good potential that run up sharply, continuously, and do very well for you without misbehaving or chopping around or other foolishness. Like Alcoa, right? AA, right? Alcoa Aluminum, Alcoa Corp, up nicely off that 29.50 long trigger. I got us out at 30, so we just got 50 cents out of it. I didn't let it ride. But that's okay. When something runs up past the previous day's trading range or the average true range, which Alcoa did today, that's in kind of a, I won't use the word overbought because I don't like that phrase, but it's in an extended region. So it's good to take the profit at a key resistance level, which is often going to be a whole number like 30. And it was. It did kind of a jog and a pullback there. So that's a good time to take profit early and often before the market pulls back, or could have just as easily reversed back down. So I got us in here and out there, and that's the right way to trade. So just a reminder, if you're not yet a subscriber at Trading Open, we'd love to have you as a member. We got so many new faces on board here too. I wanted to thank all of you for being here. I still haven't answered all the questions, and I will do so. But if you have any questions, let me know. But join for at least a month. I mean, it's no long-term commitment. You can join for a month and leave if it's not your cup of tea. But my retention rate is so high, and I have so many repeat customers and so many people that join or rejoin or refer and all that kind of stuff. I appreciate the opportunity to share with you at least what I've learned about the markets over the years that I've traded live real money trades and figure out the difference between what works and what doesn't. And again, all what we cover here in the live room is all for demo account. We don't do live trades here because we want to keep it a safe learning environment where the pressure of real dollars on the line is not there for either you or I. I'd like to focus our energy on education and training with world-class alerts and get you up to speed on what to look for, just as if you're in one of my live Las Vegas seminars or California seminars, wherever I'm doing my seminars. I've been doing them mostly in Las Vegas because I like Vegas. But anyway, this is what I would have covered exactly if we were in Vegas together in a conference room there at MGM or Caesars or Bellagio or wherever. So, you know, that's the approach that you want to take into day trading professionally, or these types of charts, which is so important, and the entry and exit trade management, which is also vitally important, the right way, the successful way that actually runs correctly, right? These are good charts. These are all good charts. These are all tradable, worth trading charts. That's such a big piece of success, you know, is trading the right instruments that actually run and leaving the rest of it alone. Spider's starting to roll over at the 10 o'clock pivot, eh? Notice, like I was telling you, I told you guys there's usually a 10 o'clock pivot at 10 o'clock. Within a few minutes, often 10 o'clock, 10:02 was the high, and then it sold down off the high right after 10 o'clock. And often you see a 10 o'clock pivot effect, which is why I put a pivot long for you guys in VXX in case it lifts over 27.60, which it may do any second now. But I'd be done trading today. We did very successful alerts for you, and I hope that it's been of service and given you a good professional glimpse into how you're supposed to intelligently bring your skills to bear in the live market, right? There's nothing like this. There's nobody else out there like me. I'm one of a kind, and for better or for worse, I get you guys very conscientious and hardworking about getting the right alerts identified for you and the patterns described to you and the specific entries and exits step by step as you look over my shoulder and we look at the alerts as they move. So the good news is we've gotten a good introduction and you've learned my approach and you've seen the success rate, right? Good, no BS, honest. They mostly worked out. Maybe a break even here or two along the way, though so far they're all still good. That's the approach that I think can really be of help to you in your own professional trading development, whether you're swing or day trading, by the way. You can use any of the new two-day high breakouts, which these mostly were, a lot of them were at least. like AA and LABU. Those are also good for swing trading entries too. So even if you're not a day trader, these are also particularly keen for or useful for swing trading as well. So, and I also have dedicated swing trading alerts down here for you guys too, like Freeport McMoran and Pandora was a swing trading alert, PVTB and AKS. So the good news is we've got a good introduction. The bad news is you're going to forget all this in the next couple of days. There's a couple of problems, and I'll go over them plus the solution right now for you guys. You've had a chance to look over my shoulder and see the success rate, even on a slow Monday, of how good the alerts work out and the explanation and the training quality. But the bad news is 48 hours from now, you're going to forget half of it. A week from now, you'll forget you're even here. 2 weeks from now, you'll say, huh? I forgot what was that? Which is normal for human nature. We're bombarded with information. The other problem is that I gave you the specific strategies and good winning alerts, but you need tools and training. You know, this is just a glimpse into the success potential of my alert strategy and what I've been teaching traders the last 16 years now. But you need the tools, and the tools and the training. By tools, I don't mean software tools. I mean the pattern recognition tools to know when to get in and, just as importantly, when to get out. And I specialize in exits because that's what determines your profit or loss in a trade, is the exit explanations and the reasons why. And that's one of the things that I focus a lot of attention on by popular demand. So many hundreds of you over the years have told me, your exits are great. I wish I could learn that. And so that's why I focus a lot of energy equally on the exit side of the equation. Does that make sense? I think that's an important piece of it, because it's, you know, if you got in, say it doesn't do a lot of good if you got in at my long at 29.50 and then you kind of let it ride all day, and by the time the end of the day reaches, say this thing has done some unexpected tank and drop, I got us in there and out there for a nice profitable call for entries and exits. If you screw around and your exit's bad and down there, you could have turned a big winner into a big loser by getting out too slow. And that's one of the challenges that traders face, is they get out too slow in their exits. Exit stage left. So I like to be very conscientious and very focused on giving you the training strategies for getting you out while they're getting still good before the market takes a profit back. So, you know, those two things, the memory recall and not having the tools and the training you need, is a big area of improvement that I can help out with. So for that reason, I would highly recommend that all of you register, if you're not yet members, at my live Trading the Open Room experience. It's our Christmas tree, my family Christmas tree. My daughter, my wife, and I put this up last night, and my wife was nice enough to take a picture. I asked her to take a picture because I wanted to share it with you guys, right? I should have been in front of the thing, but you guys don't need to see me in front of that. I'll do another picture of me with our little Shih Tzu puppy or whatever, dog. But anyway, I wanted to wish you all the very best for a happy holiday season. Any questions, I will go ahead and answer those now. Let me skim through the alerts, or through the comments, I should say. But it's the link that I want you to bookmark right now and go register at right now before you forget while it's still on your mind, is I want you all to go to tradingtheopen.com/subscribe/ and you can register now. Just join me for a month if you want. You know, it's 15 plus hours of training. And if you register this week, you will also get the Fridays included as a bonus. Normally we meet Tuesday, Wednesday, Thursday mornings, because that's the prime time for day trading. Really good use of our time. We're not boring sitting around all day long every day like morons. We like to hit and run when the getting's good, which is the midweek opens. But for this month only, I am doing Friday bonus sessions this Friday, December 9th, the 16th, the 23rd, and the 30th. So you'll also get an additional 5 hours of training with me this month, in addition to the regular 15 hours that you get all for one low subscription price. So it's only, what, $197 a month for over 15. With the bonuses, we're looking at over 20 hours of training for only $197. That's less than $10 an hour for training with me, you know, world-class professional day traders. So I'll leave it up to you to determine whether that's a bargain, but I think it's an epic bargain. And to get 20 hours with me for $197 is a fraction of what it would cost if you were in a live trading seminar with me in Vegas, or what I used to charge, which is $495, and got from many traders for many years. The price is now more than half off. So that's my holiday gift to you guys. And I wanted to hope to make you guys better informed of what to look for, and more focused and potentially more successful traders. So you saw the alert performance, good, no BS. You got to give it up, right? Got to give it up to the kid. I am stopless today, or maybe one break even if that one comes back to the 20. But the secret to the secret sauce is really strong charts, really tight exits, right? That's really important. You got to trade the strongest charts. And by looking over my shoulder, we focus on those. Not choppy E-minis, not junky penny $3 stocks or low float stocks, but instead rock stars like this one that actually have a shot of running. That's what you want to trade. At least that's what I like to trade myself. So hope that's of help. Let's see, a question from Andres about how do I manage the spread? Well, it's all paper trading. I just use my demo. I use my IB account. So I use I have a live account and I have a paper account in Interactive Brokers. So that's who I recommend, by the way, for day trading. There's nobody better in the world than Interactive Brokers. So they are outstanding. You can also, TradeStation's great too, but I like IB as my favorite go-to place for intraday stock trades. They're the institutional traders' choice of #1 choice. But anyway, the spreads are, the way that I manage spreads is I trade liquid instruments that have at least 15,000 shares per minute. And that way you get down to penny spreads most of the time. So the way you manage a spread, again, is to trade liquid instruments that have at least 15,000 shares a minute. I want you to write that down. That's a writer downer. I think it's in the PDF, so maybe you don't have to write it down. But the point is, 15,000 shares a minute is absolutely vital to avoid large slippage. What you want is penny stocks. Let's see, here we go. I was looking for the PowerPoint for you. So 15,000 shares a minute. We look for wide range charts, usually between 20 and 70 a share with at least a 1 point previous day's range, 15,000 shares a minute minimum volume, and have an opening range breakout in the previous day of at least 30 cents or more in a single run. That gives us really good starting odds for our current day's picks. Okay, so that's the type of thing that we like to look at. Mainly we focus on gap continuations and 2-day high breakouts and focus most of our energy on the first half hour using a demo account. Right? That's the right way to learn how to day trade the stock market. Not $3 stocks that are one-hit pop and drop wonders that you have to trade like a video game. This isn't a first-person shooter where you got to shoot off a trade within 2 minutes of thousands of shares of the $3 stock. You're going to blow up your account if you do that. You have my word. That's an absolutely stupid way to trade. This one did come back to even. So I did have a scratch trade, the ASNA 720. You know, no harm, no foul. I guess the broker's happy, but that's a break-even exit. And I think those are important to explain for you guys too. You know, I got you guys in at 720. It kept running on up a bit. And then I said use a break-even exit if it gets back down to 720, which it eventually did. So no harm, no foul. We're out scratch. We're not taking big stops or anything. We're using break-even exits wherever possible as a rule of thumb here in the live room experience. Because I want to do it right for y'all. It's in our shared interest for you to make as much money and to minimize the cost of stops while you're learning. And the way to do that is, #1, just use demo account trades here. But in your own live trading, you know, it's a good idea to just use a demo account. It may take years and likely will take years before you turn the corner and get to any kind of break even or a decent winning trade potential. And most traders never do get to where they could make money consistently trading. So the way to avoid losing money is don't trade real money and just learn with the simulator. It's much smarter to spend your money on training and education to learn and take your time than it is to just piss away money at big stop losses in the market because you didn't know what to look for, right? So like Ben Franklin said, an investment in education pays the best rewards or best returns, and I believe that too. I play tenor saxophone for hobby, and I've got a Skype lesson scheduled with one of the world's top tenor player, or alto. It's an alto player this Thursday, and I always like to invest in my own education, and I always buy new books. I'm always learning myself. Continuous adult learning, continuous learning and education is a lot better way to spend your life than, you know, just watching reruns of TV shows or whatnot. So that can be kind of fun too. But I like Legends of Tomorrow. It's a really good TV series, the DC universe. I like the Marvel, Flash, and DC Legends of Tomorrow, and Blacklist, and Big Bang Theory, and Two Broke Girls, and Anger Management, all these fun TV series. Anyway, as a trader, you want to tune in to the schedule that teaches you how to identify and trade the best charts out there. So thanks, everyone. I appreciate it. Let's see, Rob was saying Nike has a wide range. Let's see if it just does it in KE. Yeah, that's a good chart. Thanks. That's kind of late in the day, but I'll put that on the list for tomorrow because that's a good chart. That's also, by the way, another good strategy point I'll share with you is when you see a good wide range chart like this one that a trader just recommended or just asked me to look at. It's kind of late to play today because we're after 10:30, so we're not going to look at anything else today for alerts. But what you do want to do is put it on your focus list, say for tomorrow, because it does have a good open range breakout. It's perfectly tradable. Its momentum stopped right at 10 o'clock, so it just kind of ran into a brick wall at 10, half an hour ago. So it's not worth trading anymore today, but it is worth a shot tomorrow. So for that reason, it's good to put it on the focus list. If there's one that you miss, say you find it late in the day, don't try and trade it. Just put it on the list for tomorrow because tomorrow's another day, and you want to live to fight another day and be able to identify the charts that work out. So can I answer any other questions? You've got my attention here, and this is the free live first Monday of each month. We'll be doing another one of these again in a month from now, but in the meantime, I think you'll really learn a lot if you join me as a member, and if for those of you who aren't yet members, and learn as we continue to conquer the markets in each day's session. Well, thanks, Trader Saying, so good to be here. The best teacher, thanks. Let's see, from Camille saying, thanks, great stuff. Big help to watch a master day trader at work. We'll be back for more happy holidays. Hey, you too, Camille, appreciate it. And Andre, as I said, we meet Tuesday, Wednesday, Thursday mornings. That's what I've done the last 16 years where we got the strongest breakouts. But this month I'm adding Fridays as a bonus. And even if the markets are going to be quiet as they usually are on Fridays, we'll still identify swing longs as well as updated entry triggers for intraday as well. Let's see a question from Rob. Ken, do I keep a watch list of today's movers to look at tomorrow? Yes. And scan all over again tomorrow. I do both. What I do is I see what the charts from today were, and then I will do a scan. I use the leaderboard scan. Any good day trader will do that. To use a leaderboard scan and check dynamic, and use the percent gain and percent loss charts tomorrow morning, and then I'll see which ones are moving strongest and where the best setups are, and then I add those. I'll subtract off any of these that didn't do much today. Like if US Steel doesn't do anything today, it gets fired. You're fired. If it just chops around all day today, I'll take it off the list tomorrow. If it does make a run later in the session, I'll leave it. But then I rescan in the morning and I take off the low runners here, the ones that didn't do much, which may be half of them, which is fine. What do we have? 1, 2, 3, 4, 5 didn't hit. We had 3, 5, 6, 7 hit. So we had maybe 40% of my alerts hit, which is fine. The ones that did hit ran nicely. The ones that didn't hit, we stay out of trouble from, right? Then I'll rescan in the morning and add the alerts back to the focus list for the current day. So it's updated each morning. Well, thanks, Lisa, about the tree. I appreciate it. Thanks, Karen and Tony. Thanks, Mark, saying thanks. I'll be subscribing. You won't regret it. You get this month is 20 hours of training with me for $197. That's a total bargain. I used to charge $100 per hour for my live room sessions back when I was doing I ran the room from, 2000 to 2008, took some time off, revisited during the rare times where I did have it, it'd be like a 3-day session for $497 or something. And here you're getting, for $197, you're getting a whole month with me, right? So it's an easy monthly subscription. So, we like to be very honest and very focused and very professional about what we're doing here. Of course, I like to tell a joke now and then just for fun and keep things exciting, but for the most part, we're focused on the very strongest breakout charts, entries and exits defined for you, and explain how it all works. Question from Andre, is the morning room different where there's no free visitors? No, it's the same exact thing, except I don't have the get your access now here for the members sessions, but I add that for the once a month. That's the only difference. So what you see is exactly how I run the live room each session. So Well, thanks, Ricard, for the heads up on X is starting to run. Well, thanks, Rob, saying thanks, Ken, learned a ton. Yeah, appreciate it. I hope to clarify some misconceptions about how to trade and get you focused on the right kind of charts to trade, at least in my estimation, are these high volume, continuous runners with good momentum. And it took me many years to get the visual pattern recognition skills down to where you can produce such good, outcomes on the entry and exit calls. And that's what I hope to share with you as a member once you join. I got you guys in LABU at 38.10. It's like, no, we didn't get the bottom. No, we didn't get the out at the exact top. We got the 38.10 sell into the 39 whole number resistance. And that was good for a good 80, 90 cent win for you guys. And that's the type of chart that I think is the best to day trade. You got minor gap continuations for good high velocity charts. Another thing I'm keen on identifying for you so you can mentally build your own pattern library is the patterns that work out and the reasons why exits are called. So for example, I got us out near the high because if you kind of price project the previous day's open range breakout length, that was the same exact length price elasticity wise as today's, which is what you see all the time. And intelligently, you want to focus your energy on making your trade decisions such that you get in on decent winning trades during the breakout run, and then you get out before it gets to an extended region where it's at the previous day's extension, right? The length of the run here, kind of cut and paste that chart. It looks the same here, right? You got a bullish cup, breakout ran, pulled back here. You got a bullish cup, breakout ran, pulled back. Hey, amazing how that works. That's why I'm a big fan of the 2-day strategic charts, because you can see minute by minute price action, and I explained to you as a live room member the reasons for the entries and the duration of the run. So you see that's kind of the answer key to the market. You use these patterns to help identify likely entries, and just as importantly, where to get out while they're getting still good to lock in a profit on the trade before the market takes it back. So you're looking for a very good, careful approach using patterns that are repetitive like this. This is the best pattern where you can kind of cut and paste the previous day and stick it over here and make a winning trade out of it. That's what you do as a pattern day trader. You can't do that with the pop and drop $3 stocks like these moron kids that were in high school when I was teaching. Think about it. Some of these guys are in their 20s or early 30s when most of us, a lot of you guys are my age. I'm 52. These kids are still eating ice cream and doing roller skates in high school, whatever, back when we were actually trading. So you don't want to learn from these moron kids who are out there infesting the trading industry, trying to hawk penny stocks and BS you guys about live alert winning tons of money trading cheap stocks. That's not how you do it. Neither is trading E-mini futures, because those tend to be treacherously choppy. Today was a good day. Like I told you, out days are the only days that you want to trade the E-mini futures because it's outside the previous day's range. But most of the time you get grinding chop, which is tough to trade. So if you do trade E-minis, you need to augment that for the inside days with good volatile breakout and gap continuation equity charts as well. Hey, thanks, Damon, saying thank you, Ken. Excellent day for a Monday. Good job. Enjoy the rest of your day. Take care. You too, man. Hey, you're welcome. A question from Linda: how do I screen pre-market? Just what I showed. I look at the previous days. The first thing that I look at is previous days watch list and see which of those continue the madness and made for really good volatile breakouts. That's the most likely candidate place. Then, as any good day trader will do, I sort my quote box by percent change and see who else, at the start of tomorrow, for the end of the session today, these numbers will all be different. Who moved the most yesterday, and I start, and that's the second place. So first place is previous day's most likely suspects. Second place is my core portfolio list. It's maybe 100 or so, maybe 150 tickers to see which of these that aren't on this list I should add to this list. And then the third place is to look at the sector percent gainers and percent losers. Mostly I just focus on the gainers because I'm not a pivot trader, and I like to focus most of our energy, like today was all long wins, right? Today was 100% all longs. I like to focus this on the strongest long candidates that actually have best trade potential, therefore, for the current day. And pre-market, that'll show just the gappers. There'll be 2 or 3, 4, 5 gaps up and down using the percent gain sort before the opening bell. So to answer your question, just the previous most likely candidates that are most likely to continue. The volatility leads to additional volatility because institutional volume's at work, and so we're looking to capitalize on that as traders. So that's something I try and help out with. Well, thanks, Trader saying learned a ton. Great day again. Hey, Bob, thanks, man. Let's see, from when, yeah, we wrap up at 10:30. So no, I do not trade through a Fed meeting. I've got a life. I don't sit around like now. I mean, I'm here to answer your questions, but I wrap up at 10:30. If I had my druthers, we'd be done at 10:15 usually, but I'm staying late for you guys today because I have so many traders, but I wanted to, usually we wrap up at 10:30 because that's when things tend to slow down and go sideways and reverse and chop. So, well, thanks, Rob saying thanks again for great education. Have a great day. Till next time. Hey, you too, man. Oh, thanks, Don saying thanks, Ken. I just joined for the month. See you tomorrow. Yeah, I will send you your login momentarily. Linda's asking where do I get my leaderboard from? It's just my own personal scanning. I scan through the charts. The main place you start off with as a trader is always looking at your percent gain and loss list. So percent gainers and losers for the day. Then I have to manually look through these and see, which of these have the volume. I don't want a $1 stock with 1 million shares. That would be a piece of crap to trade. So we don't want charts like that. We want things like that one's good. Okay, so something with millions of shares that's in my target zone, 20 to 50, 20 to $40 a share. So EDU is good. That'll play. That's a good volatile chart. And notice too, please, why I use a 2-day chart. Because I wouldn't have seen all the price action yesterday without having a 2-day chart up, right? I would have just seen a little itty bitty run. This tells me a lot more about the overall price volatility. Most likely to go short down there, right? But anyway, so we're not going to put any alerts on it for today, but it does make the list, the EDU, does make the cut for tomorrow because of its overall volatility. So that's what I do, is I manually go through these types of charts and see which ones are most likely to run tomorrow. And that's part of my due diligence and what I do for you on your behalf. So I do all the heavy lifting for you as a live Trading the Open Room member to figure out these charts and which ones are actually likely to move. And then I will post the alerts for the best movers, often 2 alerts, the initial entry and a secondary, so you can get 2 shots at getting in on it for the charts that have the best volatility. So it's all about volume and volatility and good odds charts like this one. So anyway, I am done for today. Thank you so much for being here. And again, the subscription link is at tradingtheopen.com/subscribe. I hope I've debunked some myths and gotten you up to speed and enthusiastic. Hopefully I'm encouraging and inspiring and teaching you the right way to approach the markets and the right kind of charts and the sensible, rules-based, step-by-step, intelligent. I'm a UCLA grad, former corporate statistician. I got a lot more credentials, period, than most people in the trading industry. But one of the things I hope that I can get at is helping you develop your own personal approach to trading that's more consistent and helps you identify the ins and outs of how to identify charts that are worth trading and keep you out of trouble for the rest of them. So thanks all. I will see you guys hopefully tomorrow. If you're not yet members, go ahead and subscribe.